Well, the Chartmaster says the greenback is due for a pullback. Let's bring in Cornerstone Macro's Carter Worth to chart out what it means for emerging markets. Carter.
Well, that's right. We've had a big move in the dollar, and of course, we've had quite a sell-off in EM, and I think you'll get a bit of a trade here with the dollar backing down and EM bouncing. Let's look at a few charts. The first is just the DXY, the dollar index chart, and what you see here is, of course, the 60-session move, right? The 3-month January-March move, and then the one May-August. Both of these stopped, and this one we reversed hard today and closed on the low, where all that congestion is from about a year ago. So to my eye, we have come a long way, an impressive advance, almost 5%, back to a difficult level, and I think the dollar does back away here. What that means for the EM, we shall see, but my hunch is you play for a bounce. Let's look at 3 EM charts. So again, of course, this is the iShares, the MSCI Emerging Market ETF, and the first there is, if you will, the sort of February to present pullback. It's exactly 15%, and it's remarkably orderly. It's been in this channel as annotated there on the screen. Now, the next chart is sort of an up close and personal of that channel, and what you see quite precisely, again, is that EM has responded to the upper and lower band almost perfectly, to the penny, like some sort of pinball machine. So the final chart is this. This drawdown leaves us exactly at the lower band, and that's exactly where we were the last time. So this drawdown is 11.7%. The previous drawdown, remarkably similar in terms of magnitude and duration, 11.6. And my thinking here is you get a bit of a bounce and want to be long EM, just as you get a bit of a sell-off in the DXY.
All right, thank you, Carter. Let's trade this. Going first to Mr. EM, Tim Seymour. You agree with that? Think there's a bounce in store again, for EM?
I love the calm nature of Carter's description of the calm nature of the emerging markets move lower, and it makes me feel a lot better. And I do think you have a dynamic with the dollar, where as much as we want to believe that, you look at the range in the dollar, and this is a chart that could be breaking out. It also is a chart that is at the upper end of a range. I think you've also had a place here where EM currencies and even some of the rates markets have already made a fiscal adjustment, and while they're always going to be vulnerable to a dollar move. Yeah, look, I like this story. And this is a week where I think a lot of traders were tempted to pull the plug on EM. I know I was on a couple positions, and I think there is some sense of you have to change for the long run, because some of these reflation trades I absolutely believe continue, and EM is a major beneficiary of those types of move, even if higher rates are something that are always a risk.
Was it a calm description or was it a sanguine description is the real question. Nadine, I wanted to get your thoughts on Carter's comments with regard to the dollar. Do you think that it's still kind of the safe haven that it used to be, or is the market treating it differently these days?
We really think it's just trading because of China deflation. And so if we start to look at that turning around, which we don't expect to happen for several quarters, we think that the dollar could continue to strengthen. It's at the top of our trading range, so I think he's right. You could have a little bounce here in terms of it backing off. And so, if you're short the dollar, you could make a little bit of money, or if you want to go long EM. But I think what you could do is take Tim's advice and go long India, maybe short China, or short a broad EM index, because China's usually a large part of those indexes. And so therefore, maybe you'd be able to play the EM trade without having to have a ton of China, which obviously has a lot of other risks other than macro risks, a lot of headline risks. So maybe that's the way you play it.
Interesting. Nice suggested pair trade there. We have a news alert on Pfizer. Kate Rogers has that story for us. Hey, Kate.
Hey, Leslie, the New York Times is reporting now that the FDA is aiming to give full approval to Pfizer's COVID-19 vaccine on Monday. The paper reporting that this is further expediting a earlier timeline for licensing that shot. They're sourcing people familiar with the agency's planning here. We are going to reach out to the FDA, and we'll bring you any updates as we get them. Now, regulators, the paper says, we're working to finish the process by Friday, still working through substantial amount of paperwork here and negotiations with the company. The agency also had recently set an unofficial deadline, the Times reports, for approval of that around Labor Day. Of course, if this is expedited, you could see more vaccine mandates coming down the line once this is given full regulatory approval. Back over to you.
Yeah, and that could be why we're seeing a decent jump in the aftermarket, up more than 1% right now. Kate, thank you. BK, does this move the needle at all?
I mean, it's moving the needle in the after hours. I'd be very wary of these after hours moves. I mean, just like we talked about with GM, right? You're talking about a thin aftermarket trading. So I wouldn't be rushing in this evening to buy Pfizer on this news.